Our next guests agree that the Fed won't raise rates tomorrow, but they disagree on what happens after that. Let's bring in Paul McCulley, former PIMCO chief economist, and Tom Lee, managing partner and head of research at Fundstrat Global Advisors. I don't know where to start. Paul, I'll let you go first. Go ahead. What do you think happens after this meeting?
I think the Fed chair is going to say that policy's in a good place tomorrow. I don't think he's going to declare a victory. I think they will leave one last hike in the dot plot between now and the end of the year. But I think the Fed's going to say they're in a good place. Policy is restrictive. Real rates are meaningfully positive. The yield curve's inverted, and actually you're seeing some tightening in financial conditions at the back end of the curve. So I don't think that Chair Powell is going to declare victory tomorrow, but I think that he's going to have a warm and fuzzy viewpoint about the notion that we can achieve a soft landing.
Are you in the soft landing camp, Paul? I feel like you've been pretty optimistic here. I'm trying to figure out where you and Tom would differ, because I think you're both pretty optimistic.
Yeah, I don't see a reason for a recession. Doesn't mean you can rule one out because stuff happens. But I don't think the Fed wants a recession, and I don't think there is a compelling reason to forecast one. It has been, for me, a long time, a tail risk, and it remains a tail risk. It is not the base case.
Tom?
I mean, I'd agree. I think it's going to be the market's reaction to that message. Because from our conversations with clients, they're still quite hawkish because they see sticky inflation. And now with rising oil, they think that's a renewed threat to the inflation story. But I'd agree with Paul that I think the Fed's going to be in a much better place. I think it's not quite a victory lap, but I think it's going to drastically lower the odds of a November hike. I think it reduces interest rate volatility, which would be good for stocks. So to me, I think this is a setup for a rally in equities that might surprise people just because people have been so anxious about monetary policy.
Let me read you a sort of contrarian take on that, Tom, real quickly before I bring Stephen. Bob Elliott just tweeted, what happens if stocks fall, yields don't, and commodity prices rise? The answer is it's real ugly for most investors. 60-40 is an all-in bet on disinflationary growth. How prepared is your portfolio if we have inflationary weakness? Can you just address that, Tom?
Well, I mean, I'd say that that's a view that a lot of our clients share. I think for the most part, people have been skeptical of the equity markets. They've been expecting a recession really since the start of the year. And I think everything that's happened in the past 9 months has only reinforced someone's view that a recession's inevitable. It is disturbing to see interest rates creep up, but I actually think there could be an important pivot tomorrow. I mean, it just depends how the markets react to the Fed statement.